All right, let's dive in. Today, we are pulling back the curtain on a hidden empire, the massive, high-tech world of warehouses that basically makes our modern lives possible. You know, it's the physical backbone of our digital world. And let me tell you, it's a story of unbelievable change and some seriously high-stakes real estate.
Think about it. It's something we do all the time, right? You see something online, you click that button, and then, boom, a day or two later, sometimes just a few hours, it's on your doorstep. But that one little click, it kicks off this massive, incredibly complicated dance of logistics. So where does all that magic actually happen?
Okay, this number right here. This is the reason an entire industry got turned on its head. For every dollar you spend online, e-commerce needs 3 times the amount of logistics space as a good old-fashioned brick-and-mortar store. I mean, 3 times. That one single fact lit a rocket under the demand for a whole new kind of building.
So how on earth did this crazy demand for space just pop up so fast? Well, it happened one click at a time, as all of us started doing more and more of our shopping online. This wasn't just some passing trend, it was a total revolution that forced everyone to completely rethink the physical world.
And here's the scale we're talking about. E-commerce is now sitting at around 15 to 16% of all retail sales in the US. That number just exploded during the pandemic, and it's still climbing. So we're not talking about a little niche market anymore. This is a huge slice of the pie. And every single percentage point it grows means millions upon millions of new square feet of warehouse space is needed.
All of this kicked off a full-blown space race. But here's the thing, it wasn't just about building more sheds. No, companies had to create a totally new kind of supply chain, one that was faster, smarter, and way more resilient, to deliver on that promise of getting you your stuff almost instantly.
And then, of course, the pandemic came along and threw a giant wrench in the works. See, the old way of doing things was called just-in-time, which meant keeping as little inventory on hand as possible. But when supply chains completely broke down, everybody switched to just-in-case, holding huge amounts of safety stock so they wouldn't run out. And more stuff means you need more space to put it, which just added even more fuel to this fire.
So let's actually follow your package for a second. It all starts at a gigantic, often robotic mega hub. From there, it gets sent to a fulfillment center, where a person or a robot actually picks your item and packs it in a box. Then it's off to a much smaller last-mile facility right in your city for that final, super-fast sprint to your front door. It's this incredible relay race that's happening 24/7.
Now, to keep up with all this, the buildings themselves had to change a lot. Seriously, if you're picturing some dusty old shed, you've got to get that image out of your head. The warehouses that power e-commerce today are straight-up technological marvels.
Just look at the difference here. We've gone from low ceilings to ones that soar, from a few light bulbs to incredibly complex robotic systems, and from needing just a little bit of power to needing enough to run a small town. These places aren't just for storage anymore. They're high-speed engines for getting things done.
The first thing that had to change was height. You need at least 36 feet of clear space from the floor to the ceiling, sometimes even more, so you can fit those massive shelving units and let the advanced robots do their thing. In today's warehouse, the name of the game is building up, not just out.
And what happens outside is just as critical as what happens inside. You need these huge lots called truck courts that are over 120 feet deep. That gives dozens of semi-trucks enough room to back in, park, and load or unload all at the same time without causing a massive traffic jam. The goal is just constant, smooth movement.
But this might be the biggest change of all: power. A modern automated warehouse can suck down up to 400 watts per square foot. That is up to 8 times more than an old warehouse, and it's getting close to what a data center uses. All that electricity is for the armies of robots, the conveyor belts, and all the complex sorting machines humming along inside.
So all this demand for bigger, taller, more powerful buildings, it created an investment boom like we've never seen before. For a few years there, industrial real estate went from being this kind of boring, overlooked part of the market to literally the hottest ticket in the entire world.
And, as always, it's all about location, location, location. You've got your Tier 1 markets, right, like LA or Chicago, that are anchored by huge ports and millions of people. Then you have these emerging hub cities like Phoenix or Columbus that are perfect because they have great highway access. And finally, you have those super important last-mile spots tucked into expensive city neighborhoods, all to be as close to you as possible.
So who's actually inside these places? Well, it's a real mix.
A huge chunk is taken up by what are called third-party logistics companies, or 3PLs. Think FedEx or UPS, the guys who handle shipping for other businesses. Then you have the big retailers themselves, like Amazon and Walmart, plus your more traditional distributors and even manufacturers. They all need a piece of this modern logistics pie.
And this right here is why investors went crazy for this stuff. For years, it was delivering these incredible returns. We're talking 10–15% a year or more. And it felt like a much safer bet than struggling office buildings or old shopping malls. For a while there, it was pretty much the definition of a sure thing.
But like with any massive boom, the music eventually starts to slow down. That period of what felt like endless, unstoppable growth is now running into some very real challenges and risks that are making a lot of those investors pretty nervous.
What's so interesting here is the really simple story this chart tells. For a little while, developers just got carried away. They were building new warehouses way faster than companies could actually sign leases, and that led to a glut of empty space in some places. The building frenzy just got way ahead of the immediate demand.
And there are some other big storm clouds on the horizon, too. First, the industry's single biggest customer, Amazon, slammed the brakes on its expansion plans. Second, a whole bunch of those older, low-ceiling buildings are basically becoming obsolete. Nobody wants them. Third, higher interest rates make it way more expensive to build new projects. And finally, that explosive e-commerce growth is just naturally settling down into a more normal, mature pace.
So, where does that leave the whole industry? What's next for this incredibly important piece of our economy? Well, it's really a story of competing forces. There are things pushing it forward and other things pulling it back.
See, on the one hand, you still have these powerful long-term trends. Companies absolutely need to have resilient supply chains, and there's a huge number of old buildings that have to be replaced with new ones. But on the other hand, you've got the immediate pain of high interest rates and a shaky economy. It's a classic tug-of-war.
But here's the bottom line. The need for all this infrastructure is not going away. I mean, the world will always need to move stuff from point A to point B. The sector is still fundamentally strong, but the gold rush is definitely over. Now it's all about being picky, focusing only on the best, most modern buildings in the absolute best locations.
And that leaves us with a really fascinating question to think about for the future. As robots and automation take over more and more of the work inside these buildings, what's going to be the most valuable resource? Is it going to be the square footage of the building, or is it going to be the megawatts of electricity needed to power all those robots? Thanks so much for joining me.